Imagine this for a moment. It's 2 a.m. in a quiet American suburb. A family is asleep, the hallway lights are dim, and everything feels normal until a sudden knock shatters the silence. When the door opens, life changes forever. The only breadwinner of the home won't be returning. And now the real fear begins. Who pays the mortgage? Who keeps the lights on? Who covers the funeral that costs more than a used car? As the bills pile up and the reality sinks in, one thing becomes painfully clear. The only thing that could have protected this family was life insurance. And that's exactly why millions of Americans depend on it every single day. Across the United States, life insurance isn't just a financial tool. It's a lifeline in a country where the cost of living, the cost of dying, and the cost of raising a family are higher than most people can imagine. Most Americans live inside a tight financial structure built around debt. Long-term mortgages, car loans, student loans, credit cards, and medical bills that can appear out of nowhere. That's why when someone like John, a 38-year-old father working 2 jobs, dies suddenly in a highway accident, his family isn't just grieving emotionally, they're drowning financially. His $2,200 monthly mortgage, utility bills, groceries, and kids' school fees don't pause for grief. But because he had a $500,000 term life policy, his wife Emily could pay off the mortgage, cover immediate bills, and keep the home stable, giving her time to breathe, think, and rebuild her life. This scenario is incredibly common in the US, where more than 80 million homes depend entirely on one person's income. And then there's the brutal reality of funeral costs. In America, a simple funeral can range from $10,000 to $15,000, and these expenses must be paid immediately. That's why seniors like Michael, earning a modest income, purchase small final expense policies. When he passed unexpectedly, his daughter didn't have to start a GoFundMe page or borrow money. His insurance meant she could say goodbye with dignity, without financial panic. Many Americans have watched neighbors fall into debt after a family member dies, which is why older Americans, especially those over 55, buy life insurance simply to avoid leaving a financial mess behind. Single parents face even tougher realities. Take Jessica, a 31-year-old single mom raising her son in a small apartment. She earns enough to pay rent, daycare, and groceries, but she knows that if she dies, her son has no backup parent, no emergency fund, no savings, nothing. That's why a small monthly payment for a $300,000 policy becomes her son's survival plan. With such coverage, her child would have years of security, rent, food, school, and even college savings. In America, over 15 million kids are raised by single parents, and for them life insurance is not optional. It's the only thing separating stability from disaster. Even stay-at-home parents who don't earn a salary are insured because their work has massive monetary value. In the US, childcare alone can cost $1,200 to $2,000 per month, housekeeping hundreds more, plus after-school care, transportation, and meal preparation. When Sarah, a stay-at-home mom, passed away unexpectedly, her husband David was suddenly responsible for everything: kids, work, home, bills, without support. But because she had coverage, David was able to hire help, maintain a routine for the children, and process his grief without falling apart. Americans understand that even a parent who doesn't bring in a paycheck still holds the home together, and losing them creates financial shockwaves. Then comes the biggest long-term fear: college. American college tuition can go as high as $70,000 per year, making higher education nearly impossible without planning. That's why families like Robert and Linda buy larger term policies, so that even if a parent passes, their children's academic future stays secure. When Robert died after a long medical battle, his policy covered not just rent and living expenses, but also allowed both of his kids to attend college, fulfilling a dream he started but couldn't complete. For many families, life insurance becomes the bridge between tragedy and opportunity. And beyond these major examples, millions of Americans buy life insurance to cover a range of real-life challenges. Protecting spouses from sudden loss of income, paying off shared debts, covering medical bills, securing retirement for a surviving partner, and preventing families from losing everything they built. In a country where 60% of people have less than $1,000 in savings, where medical emergencies can cost thousands, and where financial pressure never truly stops, life insurance becomes the safety net that ensures one tragedy doesn't create another. It provides time, stability, and dignity. The three things every grieving family desperately needs. In the end, life insurance isn't about death, it's about responsibility. It's about making sure your family is protected from financial chaos when they're already facing emotional devastation. Whether you live in America or anywhere else, the truth remains the same. Your family deserves security even when you're not here to give it. That's why Americans take life insurance so seriously, because they believe one thing deeply: my family must survive, even if I don't.